Good evening, everyone. Welcome again to another live streaming of basic transfer pricing. Thank you very much po sa ating mga subscribers at umabot na po tayo ng 431 no, sa basic transfer pricing natin. No? Shout out, may viewers na tayo.
May viewers na po na 6 viewers.
Okay, shout out.
Wala pa po.
Wala, okay. So shout out po sa ating mga viewers and tonight we will continue with our discussions on the case of Coca-Cola versus the Commissioner of Internal Revenue, no, US. Just a way of review doon po sa what we have discussed earlier or in the first part, no, 2 parts of our discussions. This case is about the Coca-Cola versus the U.S. Commissioner of Internal Revenue or the IRS on their transfer pricing case. No? This is a transfer pricing case. At ano po yung nangyari dito at ano yung verdict ng court. No? Kasi nasa Court of Appeal pa lang po ito. No? Wala pa sa Supreme Court. Ang Coca-Cola dito ay inassess ng IRS ng mayroon silang findings na deficiency income of 9 billion no for 2007, 2008 and 2009 for the 3 years. 9 billion ang deficiency na undeclared income no, nag-additional income sila ng 9 billion. So for 3 years ang computation is more than 1 billion a month, no? Kasi 9 billion na income, you multiply it by the tax rate. So yung it comes out na yung deficiency niya is more than 3 billion for the 3 years. And ano po yung reason kung bakit nagkaroon ng additional assessment ang Coca-Cola in this case? Because of the royalty payment. It was found out na underpaid ang Coca-Cola US ng kanyang royalty at ang royalty niya na dapat royalty na ibabayad sa kanya napunta doon sa ibang subsidiaries niya no, sa ibang companies, sa ibang group of companies. Bakit? Kasi yung ibang group of companies over yung income na dineclare, samantalang yung sa US sobrang liit lang ng dineclare. Kaya since ang owner dito ng IP is the Coca-Cola US, so nag-assess sila ng deficiency na royalty payments para doon sa bayad ng mga intangibles ng Coca-Cola. At in-assess nila yun against the Coca-Cola na over naman yung income. No, ano yung ginamit dito na yung gross profit rate, comparable profit method. Yun po yung ginamit dito. Kasi it was found out na yung volume ng sales, ng income, nandoon sa ibang company, which is 85%. Ang profit nila, gross profit nila is something like 57%, no? At ang mga comparable, masyado silang malayo, mas malaki sila doon sa mga internal comparables din na ginamit sa Coca-Cola and also yung mga internal and external comparables po na ginamit dito sa Coca-Cola, no? Same economic activity with Coca-Cola. So, since yun po yung findings ng IRS, nag-appeal ang Corp, no? Punta siya sa korte. Pagdating sa lower court, in-uphold ng lower court, ang IRS. So, panalo yung IRS dito. Nag-appeal sila ulit sa tax appeal. Panalo na ulit yung Coca-Cola. Kasi ang nakita ko in this case, yung mga arguments dito, nagkulang ng documentation ang Corp, no? So especially when it comes to the agreement, no? Kaya yung mga previous, yung pinag-usapan natin dito, what are the strategies of the Corp, the history of the Corp, the economic condition, and then the strategies niya in marketing. In our second discussion, we discussed about the agreements, no? Kung ano yung mga agreements ng ginawa ng Coca-Cola, the internal, and then dun sa mga independent butlers niya. Now, let us continue with our discussion. Still, we are on the agreements, no? And this time, yung yung sabi ko pala na gawan ko ng diagram, no, yung Coca-Cola. Kasi yung Coca-Cola, meron siyang IP na intellectual property company na doon nagbabayad ng mga royalties. Yun yung the Coca-Cola company based in Atlanta, Georgia. And from that, the Coca-Cola company or the TCCC, meron na siyang mga affiliates, mga subsidiaries all over the world, no? Pero lahat yan, isa lang ang may-ari ng TCCC, yun lang yung headquarters nila based in Atlanta, Georgia, no? So the IRS came up with the analysis of the agreements na meron yung Coca-Cola with its butlers, no? At saka yung sa service point niya, yung mga service companies. And we will continue tonight with the agreements. Kasi paano natin malaman na arm's length yung mga agreements? Of course, yung agreements should be the compensation or the consideration or the remuneration on the agreements between related parties should be at par with that of the independent parties. Kasi kung hindi, then hindi arm's length, then the IRS can also always make an adjustment, which happened in this case. No? So let's continue with our discussion on agreements. And tonight, we will discuss the Butler Agreements. Dito tayo na end nung last discussion. No? What is this Butler Agreements? Kasi itong Butler Agreements, sila na yung nagmamanufacture ng Coca-Cola. And they exploit the name, the trademark, tsaka yung mga iba pang intangibles ng Coke. No? Sila na yung gumagawa ng Coke at sila na yung nagbibenta, nagdi-distribute sa Coke products, no? Pupunta na sa mga consumer. Okay. So, this Butler Agreements, ito namang Butler, saan siya kumukuha ng mga supplies niya of the concentrate? From the Servco or the service company po ng Coke. Sila yun naman yung nag-formulate ng mga concentrates and then dinidistribute nila sa mga butlers. Ang butlers naman ang gumagawa ng Coke, no? Okay. So the Butler Agreements. This is the agreement between the butlers, yung mga gumagawa na ng Coke, and the TCCC or the Coca-Cola Company, which is based in Atlanta, Georgia, na siya yung may-ari ng name na Coca-Cola, logo, brand, at saka yung formula. No? So in short, siya talaga yung may-ari ng Coca-Cola. No? Okay. So for the Butler Agreements, the petitioner, which is the Coca-Cola in this case, executed formal agreements with hundreds of Coca-Cola butlers throughout the world. No? So in virtually all of the agreements, TCCC is shown as the legal counterparty to the butler. These agreements, like the supply point agreements, were based on templates that reflected standard terms and conditions. So, nandoon yung mga terms and conditions. That's why during the transfer pricing analysis, the agreements signed by the company during the year were all have to be presented as a transfer pricing documentation. No? Lahat yan, i-attach natin yan in soft copy, no? Pa-receive natin sa BAR. And yan ang gagamitin ng examiner during the transfer pricing audit kung lahat ba ng agreement signed by the company during the year are arm's length. No? Okay. So the principal variations among the Butler Agreements involve the length of the contract term, no? Kung ilang taon yung contracts, the notice periods, kung halimbawa meron nang gusto mag-terminate ng agreement, so ilang month ang required that the other party will have to notify the other party in the agreement for the termination of the contract. No? The choice of law, on the exclusivity of the rights granted, no? Whether exclusive distributor siya or exclusive manufacturer siya or not. No? Unlike the supply agreements, TCCC's contracts with its butlers explicitly granted them long-term and generally exclusive rights to produce and sell TCCC's products within the respective territories. Why? Kasi itong mga butler agreements, marami itong assets na ipundar kasi manufacturing sila. So they have to set up their manufacturing machineries that will be used in the manufacture of Coca-Cola. So generally, yung kanilang contracts are long-term and exclusive, no? Exclusive meaning wala nang ibang bibigyan ng kontrata yung Coca-Cola pag meron ng butlers in a certain territory, no? So number 1, patayin mo na yung hari. Patayin mo na yung aircon kasi medyo malamig na. Sakit sa likod. Okay. Okay. So what are the rights and the obligations na provided in the contract, no? So the production and sale of finished beverages, so yun yung isang subject. Through the Butler Agreements, TCCC's licensed butlers to use its trademarks and other intangible property to produce, sell, and distribute finished beverages. No? So yun yung nasa agreement. The TCCC, binigay niya yung license sa butlers para gamitin yung kanyang trademarks and other intangibles. No? What are these other intangibles? These are the logo, the brand, at tapos yung paggamit dun sa yung shape bottle, no? Like the supply points, butlers covenanted to adhere strictly to CCC's production standards and to grant TCC access to their facilities for periodic quality assurance inspections. So, inallow nila yung Coke na mag-inspect sa kanila regularly. No? So, like the supply points, butlers were required to buy ingredients from TCCC affiliates or TCCC approved suppliers. Unlike the supply points, butlers enjoyed no right to purchase these inputs at any predetermined price, no? So, hindi predetermined yung price. Of course, kung ano yung prevailing during the period, no? Wala sa kontrata na predetermined yung price, no? Wala. Whereas the supply points were permitted to sell concentrate only to TCCC-approved butlers. Butlers had complete freedom to sell finished beverages to any wholesaler or retailer within the respective territories. So, pwede siyang magbenta sa kahit sino yung wholesaler or retailer basta't within the territory. No? So, the Butler Agreements granted TCC the right to review and approve butlers' annual business plans, which were usually developed in coordination with the local business units. So, take note ha, kasi yung pinag-usapan dito, these are the provisions na po sa contract. No? Kasi hindi lang pinapakita dito yung mismong kontrata, but iniisa-isa dito yung provisions in the contract. Once a business plan was approved by the headquarters in Atlanta, the butler agreed to prosecute diligently the details of the plan and to update TCCC regularly on plan implementation by submitting sales reports in a format specified by TCCC. No? So, my report. Butlers also made software commitments to satisfy fully the demand for each of the beverages within the butler's territory and to spend such funds for the advertising and marketing of the beverages as may be required to maintain and to increase the demand in the territory. So that's the purpose of this funds, no, for advertising. Trademarks. Butlers had limited trademark rights similar to those granted to the supply points. While butlers could use TCCC's trademarks in connection with the production, sale, and distribution of finished beverages, they expressly acknowledged that TCCC owned the trademarks together with any goodwill generated by the butlers' use of the trademarks. So, di ba yung butlers, they are required to have funds for the advertising and marketing the beverages. So, once na-develop na, kilala na doon sa territory ng butlers ang Coke, still the developed intangibles still belong to the TCCC at hindi siya belong to the butlers, no? Okay. TCCC reserved the right to control most aspects of trademark use, and butlers covenanted to seek approval from TCCC for most advertising, promotions, or other marketing that employ these trademarks. In practice, the local SERVCO generally supplied such approval. Term length and exclusivity. The specified term of most Butler Agreements was between 5 and 10 years. No? So 5 and 10 years yung term. The largest independent butlers, including CCE, Coca-Cola FEMSA, Hellenic, and Coca-Cola Amatil, which did business in Australia, had agreements with 10-year terms. Explicit approval by TCCC was required to renew a Butler Agreement at the expiration of its stated term. The agreements generally precluded automatic renewal based on tacit approval. As with supply point agreements, TCCC reserved rights that allowed it to terminate Butler Agreements on no more than a few months' notice. Butlers would have preferred longer-term contracts granting TCCC more limited termination rights, but TCCC consistently refused to agree to such modifications. In practice, the mutual dependence between the company and its butlers ensured that Butler Agreements were almost always renewed. When a butler performed badly or encountered financial difficulties, TCCC's solution typically was not to terminate the butler, but to acquire it, put it into the butler hospital. Imagine, may hospital pa sila, no? And supervise its operations from Atlanta until it had recovered its footing financially and operationally. Pagka medyo nag-down yung operation ng butler, no? See SOPRA page 17-18. TCCC would then divest the butler to new owners with its butler contract intact, no? So, ililipat na siya pagka hindi talaga maka-recover or depende na yun sa agreement na ulit ng Coca-Cola with the butler, no? Many of the company's major butlers were public companies required to disclose financial information in annual reports and public filings. CCE, one of the top 3 Coca-Cola butlers, described its relationship with TCCC as follows. While the Butler Agreements contain no automatic right of renewal, we believe that our interdependent relationship with TCCC and the substantial cost and disruption to the company that would be caused by non-renewals ensure that these agreements will continue to be renewed. No? So yun yung description and relationship ng Coca-Cola with its butlers. For this reason, most major butlers, including CCE, Coca-Cola FEMSA, and Hellenic, assigned to their bottling contracts an indefinite useful life for accounting and financial statement purposes. Imagine yung contracts nila indefinite, no? Useful life. Samantalang yung term is only 5 years or 10 years. Butler agreements also differed from supply point agreements in the exclusivity of the rights they granted. Supply points enjoyed no exclusivity whatever, no? So hindi exclusive ang supply points. They were always at risk of having TCCC shift their production to another supply point, which could then sell to butlers in their home country. Kasi yung service point, ito yung nagsusupply ng mga concentrate for the use to the butlers para i-manufacture ng Coke, no? And hindi exclusive yung contract with them kasi pwede silang magbenta ng concentrate kahit kanino, provided accredited din ng Coca-Cola. No? So by contrast, TCC agreements with most butlers included a geographically defined market in which the butler was granted exclusive rights to produce and sell beverages. The legal landscape was different in the EU and the European Economic Area, where the Treaty of Rome guaranteed the free movement of goods among member states. For that reason, explicit exclusivity clauses are generally absent from European Butler Agreements. Why? Because it's their government na nagsasabi na free yung movement ng goods, no? But in practice, butlers respected each other's notional territories and rarely attempted to sell into them. No? As explained by John Brock, a longtime industry veteran who formerly led CCE, there was within the EU an implied geographic exclusivity, but it was not spelled out. No? Parang assume lang or imposed pero wala sa kontrata. Why? Kasi pagka mayroon ng exclusive na butlers doon na din sa kanila. Hindi na nagbebenta doon yung iba. No? Okay, so yun po yung contract or agreements with the butler. The next point for discussion here is the remuneration. No? How is these butlers being remunerated? No? Kasi sila yung nagmamanufacture. Paano sila kumikita? No? So the butlers remunerated the company through the price they paid for concentrate. No? So ang ginagawa ng butlers, ang compensation nila, yung pagsusupply nila ng concentrate. No? That price in effect bundled all of the company's valuable inputs into a single bill, no? Ostensibly for concentrate. So yung bayad ng butlers sa Coca-Cola, no, for the use of its intangibles, logo, trademark, nandoon na sa isang bill at yun yung pagbayad niyan doon sa concentrate. So ibig sabihin, bumili ka ng concentrate, ikaw butlers ka, bumili ka ng concentrate from the service points na owned also by Coca-Cola. Pag bumili ka doon, yung pagbili mo ng concentrate na doon, naka-embody na doon pati yung payment mo for the royalties. No? Yan din yung explanation ng isang taxpayer na na-audit ko. No? By paying this bill, butlers secured not only the physical beverage base, but the entire package of rights and privileges they needed to operate efficiently as Coca-Cola butlers. Why? Because it is not specified in the contract na ito yung bayad ko sa concentrate, ito yung bayad ko for the royalty payments, ito yung bayad ko for the services, and so on. No? Basta isang single bill lang yan, nandoon na lahat. This package included the right to use TCC trademarks, access to TCC-approved suppliers, access to critical databases and marketing materials, and the expectation of ongoing consumer marketing support from TCC and the ServCos. Imagine isang bill lang yan. Pero nandun na lahat, naka-embody na. No? Pero hindi ni-specify kung magkano yung binayad mo doon sa right to use the trademark, to access the suppliers, to access the critical databases, hindi nilalagay doon. No? Kasi kung isa-isahin mo siya, magkaiba ang nature ng bayad mo. TCC reserved the unilateral right to set the concentrate price, which in theory enabled it to determine the butler's profitability. But in the real world, as Petitioner notes, concentrate prices were established through local negotiations. No? Local negotiations within their jurisdiction. These local negotiations aim to equitably share system operating profit, the total pre-tax operating profit accruing to the company and the butler from the butler's sales of the company's beverages. No? So yun na yung sinasabi nila na local negotiations, ito na yung kanilang agreement. No? Generally, the party's goal was to achieve something like a 50-50% split of the system profit. Sila na mismo nag-uusap-usap na no, on how to divide the profit. In practice, the division usually ranges between 45% and 55% in favor of one party to the other. So, hindi siya talaga hati, no? The butler might negotiate for a share near the high end of this range if, for example, it faced economic headwinds or expected to incur large capital expenditures. By using estimates of future revenues and expenses contained in budgets and business plans, TCCC and the butler could negotiate a concentrate price that was expected to deliver the intended share of system profit to each party. Adjustment to the concentrate price was a major undertaking that required ultimate approval by headquarters in Atlanta. An officer of the one business units described it as the mother of all negotiations with a butler. So yun yung tawag niya doon sa kontrata. Ha? Adjustment to the concentrate price was a major undertaking that required ultimate approval by headquarters in Atlanta. No? Kasi price na yun ng concentrate eh. At bakit very crucial po yung price ng concentrate? Because, di ba sabi natin na sa single bill lang ng concentrate na yun, nandun na lahat, kasama na yung mga right to use the intangibles and other charges, no? Kaya hindi siya talaga concentrate, no? Ano siya, component of the charges, yun nandoon sa concentrate, no? Kaya anong tawag sa kanya? Mother of all negotiations with a butler. Such negotiations were typically undertaken only once every few years. Between those revisions, unexpected fluctuations in consumer demand, local inflation rates, or currency exchange rates could occur. If those risks materialized, use of a fixed concentrate price could throw off the intended division of system profit. At yung kumbaga sa yung elasticity ng profit nila nandoon din sa concentrate. Kaya very crucial ang concentrate, no? TCCC and its butlers devised two solutions to this problem. No? One solution was some form of variable pricing. No? So, nandiyan na yung tinatawag natin na variable pricing. So, pag variable siya, pwede tumaas, pwede bumaba. In Latin America and Eastern Europe, in particular, Butler Agreements increasingly adopted incidence pricing. Ano naman itong incidence pricing? Kaya nga sabi ko, natutuwa ako dito kasi I learned about incidence pricing, I learned about variable pricing, which is ginagamit, no? In this case. Whereby, incidence pricing? Whereby the concentrate price was initially determined at a fixed price and then trued up to reflect actual sales or incidences when more complete financial data became available. No? So, nandun talaga sa concentrate yung pataas, pababa, doon nila kinokontrol, no, yung pricing nila. In Western Europe, where currencies and inflation rates were generally less volatile, TCCC and its butlers employed a subtler version of variable pricing keyed to butlers' prior year sales or projected current year revenues. A second solution was to adjust, as compared with the original business plan, the marketing expenditures that the company and its butlers were going to make. For example, if the system profit split moved unexpectedly in the company's direction, it might agree to reimburse the butler for certain trade marketing expenses. No? So, parang ito na yung sinasabi din nila na yung variable pricing. Kasi pag medyo tumaas yung or bumaba, may mga action sila na gagawin, no? Just like halimbawa yung profit split move unexpectedly, no, in the company's direction, then magre-reimburse yung TCC sa butler, no? Okay. So, or the company might agree to increase its consumer marketing expenses in the Butler's territory. Kaya na-adjust nila yung, sabi natin kanina, yung DMA, very important sa kanila yung direct marketing expenses kasi doon pala nila ina-adjust yung expenses, no? Which would be expected to increase the Butler's sales and profits, no? Kasi pagka in-adjust nila dun sa marketing expenses, pag dinagdagan nila, increase yung profit ng Butlers. Pag pag binawasan nila yung marketing expenses, siyempre maliit, lalaki yung income, so increase yung profit. Pag dinagdagan naman nila yung marketing expenses, lalaki yung expenses, liliit yung income, so liliit yung profit. So in 2005, for example, TCCC appeased calls by Latin American butlers for lower concentrate prices, no? So nakiusap yung Latin America to lower the concentrate prices. Pero kung tutuusin mo, ang sinasabi lang dito concentrate prices, but if you want to take a look on the sinasabing concentrate prices, hindi lang yan basta concentrate prices. Why? Kasi nandun na yung royalty payment and other charges. Among other things, agreeing to reinvest an additional 20% of concentrate revenues in mutually agreed marketing projects. So yun yung Latin American butlers, yung parang bargain nila with Coke. Conversely, if the system profit split moved unexpectedly in the butler's direction, so halimbawa yung mas tumaas yun naman yung profit ng butlers, the company might reduce its support for local trade marketing, or the butler might increase its marketing expenses by accelerating placement of colors in retail stores. So, yung pag-a-adjust nila ng price ng concentrates, ang daming affected, no? Kasi hindi lang naman talaga concentrate price yung nandoon, no? Package yun, package. Kaya pag tumaas bumaba yun, malaki din yung effect. Okay. Generally speaking, butlers paid the full concentrate price to the supply points from which they purchased concentrate, no? In some markets, however, the company engaged in split invoicing. Kaya sabi ko maganda dito kasi ang dami ko rin natutuhan dito. And what is this split invoicing? Under this practice, ditong split invoicing, this split the invoice, the supply point invoiced the butler for a portion of the concentrate price. So, ang supply point, siya yung supplier ng concentrate. Portion lang ng concentrate price yung ini-invoice niya. And the local Servco issued a separate invoice. Sino naman tong service company? Ito naman yung local. This is another company na may owned also by Coca-Cola, no? So the local Servco issued a separate invoice to the butler for the remainder of the concentrate price, no? So imagine, hinati nila yung invoicing. Kaya nga ang tawag split invoicing, no? Ang kalahati, ang nag-i-issue si Servco, ang isa si Service Point, no? Ang kalahati, part of the price kay Servco, part of the price kay Service Co. So what happened? While split invoicing occurred, the Servco wound up receiving a portion of the revenues that the supply point would otherwise have received as payment for concentrate, no? So ang nangyari dito, na dapat income ni supply point napunta kay Servco, no? The service company ng Coke. So split invoicing was used chiefly with butlers in countries that were susceptible to high inflation or exchange rate volatility. By having the butler direct a portion of the concentrate price to Servco in the same country, the company was able to mitigate the effects of currency controls, delayed VAT refunds, and related fiscal problems. So ito yung ina-address nila na problema, no? So, delayed VAT refunds, related fiscal problems. So, in effect, ano nangyari dito? Servcos used their split invoicing revenues to offset expenses that otherwise would have been reimbursed with markup were applicable by export under a Servco agreement. So the Brazilian, Chilean, and Irish supply points, which supplied concentrate to the butlers in questions, lost revenue as a result of this practice. So, sino ang nawala ng revenue? Ito yung si Brazilian, Chilean, and Irish supply points. And if you try to look at ang laki ng sales ng Coke or ng income ng Coke dito sa tatlong supply points na to, no? So, papaano yun? Nawala yung kanilang revenue, napunta kay Servco through that scheme of split invoicing. But they also avoided having the corresponding expenses of the 10 Servcos charged to their books. During the tax year at issue, the total split invoicing revenues received by the Servcos and the expenses they allocated to these revenues were as follows. Ito na yung split invoicing, no? So, affected supply point, the Brazil, Ireland, and Chile. And then the revenue recipient, no? So, ito yung mga dapat nasa Brazil, Ireland, and Chile ang sales na punta dito sa mga recipient, no? Ito yung Venezuelan Servco, Colombian Servco, Mexican, Turkish, Moroccan, Bulgarian, Peruvian Servco 1 and Servco 2, Ecuadorian Servco, at saka Bolivian Servco. So how much is the total for 2007 and 2009? 1.3 billion, no? Magkano naman yung total expenses nila is 1 billion. So how much is the markup on total expenses? No? So 39.47. Okay. So 10 Servcos receive split invoicing, no? So ito yung 10 na sinabi ko sa inyo kanina. At sino yung affected doon? Sino yung nawalan? The Brazil, Ireland, and Chile. Kasi pumunta sa Servco yung kanilang supposed to be sales, no? 10 Servcos reserve split invoicing revenues during 2007 to 2009. No? Kaya dito din pumasok yung findings or yung adjustment ng IRS, no? Okay. The markups that Servcos received from butlers under split invoicing were significantly higher on average than the markups Servcos normally enjoyed under their contracts with export. The average markup under exports contract was 6% to 7%, no? Yun yung markup. And this markup generally did not apply to amounts Servcos paid for third-party marketing services. As shown in the table, the average markup Servcos received under split invoicing was almost 40%, no? So 40% yung average markup niya. Okay. May shout out?
Wala pa po.
Ilan yung ating viewers?
6 viewers.
Okay. Sige. So, 5 of the Servcos had agreements with the butlers from which they received split invoicing payments, no? So, these agreements required the Servco to provide the butler with services resembling those specified in contracts that Servcos typically executed with export. The agreement executed by the Venezuelan and Ecuadorian Servcos specified no compensation formula, no? So imagine walang compensation formula. The agreements between the Mexican Servco and its butler Coca-Cola FEMSA called for a 5% markup on expenses other than DME. Ano yung DME? Direct marketing expenses. The agreement between the Turkish Servco and its butler called for an 8% markup on expenses other than DME. Bakit other than DME? Kasi di ba yung DME, yun yung variable nila, no? Yung variable pricing nila na pag gusto mong taasan ang expenses para bumaba yung profits o gusto mong babaan yung profits ay yung expenses para tumaas yung profits. Plus a success fee calculated on increases in year-over-year sales, no? Parang success fee, ibig sabihin parang award. Assets and income. In 2000, the company began using the data collection, consolidation, and reporting system, or DACARS, for its worldwide operations. DACARS tracked the financial performance of its subsidiary, branch, or other entity that prepared and submitted data to headquarters for consolidation purposes. Isa sa mga i-discuss natin sa tax preparer, ito po yung consolidated financial statements, no? Kailan ba dapat mag-consolidate, no? As part of our effort to ipupush natin or ibuboost natin tong mga requirement ng SEC, no? Being, ano na tayo, Hari, accredited SEC, no? Kaya nga dapat, alam nyo, ang accreditation actually carries with it obligations. Why? Kasi once na accredited ka ng BAR, it's your duty to adhere to the requirements of the BAR. Accredited ka ng SEC, it's also your duty to adhere to the requirements of the SEC. So, kailangan natin din i-discuss itong mga consolidated financial statements, no? So, income and assets reported in DACARs were aggregated and reported under one or more data codes and submitted as financial statements for various managerial units, no? Kaya may consolidated financial statements. In the ordinary course of its business, the company did not prepare financial statements for the supply points, the most relevant units for purposes of transfer pricing analysis. Kaya nilagyan ko to ng question mark eh. Why question mark? Kasi company did not prepare financial statements for the supply points. Pwede ba yun? At ano sabi dito? This is the most relevant units for purposes of transfer pricing. Yun pa ang pinaka-importante. Yun pa yung walang financial statements. Oh. Kaya sabi ko, if you try to look at the case, ang ikatatalo mostly ng case yung failure to document, no? Or it might also be intentional na hindi talaga sila nag-prepare. Why? Kasi nandito sa supply points ang ano eh, kumbaga sa ano, ito yung the most important part ng operation sa supply points. Bakit? Kasi ang supply points nagko-control ng concentrate. At ano itong concentrate? Hindi lang siya basta concentrate because it embodies everything. No? Ano yun? Na charges, pag nagbayad ka ng concentrate, nandun na lahat ng klase ng payments. No? So, yan ang pinaka siguro, masasabi na natin na, ano yun, blunder. No? Siguro blunder ng consultant. Kasi bakit hindi niya pinagawa ng financial statements yung supply points, which is very crucial. However, the DACAR's data codes can be manipulated to generate separate balance sheets and income statements for the supply points, no? Pero yung kanilang data collection, consolidation, and reporting system na ginawa nila, pwede mag-generate ng statement na yun, no? So the parties have prepared and stipulated pro forma balance sheets and income statements for 2007 to 2009 for each of the 7 supply points involved here. Kasi 7 supply points yung involved doon sa findings dito ng Coca-Cola. But mind you, 85% naman yan ng total sales ng Coke, no? In that area. At the parents level, the relevant unit is a consolidation of TCCC and export that excludes the operations of the business units that conducted the U.S. and Canadian beverage businesses. We will refer to this consolidated unit as headquarter. Headquarter owned the trademarks and other intangible property at issue in this case. Diba? Yung headquarter sa Atlanta. And it received the royalties paid by the supply points. Samantalang sa agreement, wala kang makitang supply point, royalties, no? But sabi doon na, pag nagbayad na sila ng concentrates, nandun na pati yung payment ng royalties, no? In the ordinary course of the business, the company did not prepare distinct financial statements for headquarters, no? Kaya nga ngayon, mind you, sa mga transfer pricing analyst ngayon at saka sa mga transfer pricing officers, during the transfer pricing audit, the transfer pricing officer may require a consolidated financial statements and also a segmented financial statements. Yun ang i-video natin, Hari, how to prepare a consolidated financial statement and how to prepare a segmented financial statements. Ito yung hindi nila piniprepare eh. Company did not prepare distinct financial statements for headquarters, But again, yung consolidated data nila. But the DACAR's data codes can be manipulated to generate balance sheets and income statements for it, no? So yung kanilang system can make those financial statements, pero hindi nila ginawa, no? The parties have prepared and stipulated pro forma balance sheets and income statements for headquarter for 2007 to 2009. Ito na yung during the transfer pricing audit, you will be required to make that kind of statement or report. The SERVCOs presumably prepared financial statements in the ordinary course of their business, but the parties have not introduced any SERVCO financial statements into evidence or made any stipulations concerning their assets or income, apart from the income earned by SERVCOs that receive split invoicing revenues, no? So, hindi nila pinakita yung financial statement ng SERVCO. Sino itong SERVCO? Sila yung um, affiliate also of Coca-Cola, no? That receive yung split invoicing, di ba? Yung supply points, instead na siya yung mag-i-invoice doon sa binibenta niya na concentrate, si SERVCO ang nagbibill, no? So, most SERVCOs were compensated on a cost-plus basis, and it is a fair inference that the reported assets and income were generally quite modest. Kaya tingnan nyo ha, this is in connection with the inventory natin na requirements, di ba? May list of inventory tayo. So, paano mamakita itong split invoicing nila? Sa inventory. Kasi wala namang inventory si SERVCO. Bakit siya nag-i-invoice? Sino may inventory dito? Kaya may understatement dito ng sales may nawawalang sales dito si supply ko. Bakit? Kasi nasa kanya yung inventory ng concentrate. Bakit ngayon hindi niya na invoice ang lahat yon? Si SERVCO nagkaroon ng invoice na wala naman siyang inventory, no? So siguro yun yung magiging loopholes dito sa ginawa nilang scheme na invoice si SERVCO na wala naman sa kanya yung inventory, no? So ano yun, invoice niya? So during 2007 to 2009, headquarters should average book assets of about 15 billion, no? The bulk of these assets, 11.7 billion on average, consisted of investment in subsidiaries and other affiliates. So yung total na assets ng headquarters is 15 billion. Ang malaki doon, investment niya sa subsidiaries and affiliates, no? Headquarters balance sheet showed trademarks and other intangible assets of about 500 million. So, ano yung assets niya? 500 million doon sa intangible assets. This figure does not reflect the market value of the company's self-developed intangibles and beverage brands, no? During 2007 to 2009, headquarters was the registered owner of virtually all trademarks covering the Coca-Cola. So, ang may-ari niyan yung headquarter, yung TCCC, based in Atlanta, Georgia, no? So, yun yung trademarks ng Coca-Cola, Fanta, and Sprite brands, and of the most valuable trademarks covering the Coca-Cola's other products. Headquarter was the registered owner of nearly all of the company's patents, including patents covering aesthetic designs such as battleships and cups. Ano yung patents? Ito yung step-by-step na procedure, no, or processing pagdating na sa activity ng company, which is in this case manufacturing of soft drinks. Packaging materials, beverage ingredients, and production processes. So lahat ng yan, ang may patent niyan, yung may-ari dyan is the Coca-Cola headquarter in Atlanta, Georgia. Headquarter owned all intangible property resulting from the company's research and development concerning new products, ingredients, and packaging. No? I don't know how they go about this on their patent. Kasi patent is protected only for 20 years. After that, it will become off patent. So, hindi ko alam paano yung kanilang patent stay forever. Na ang patent life of the patent is only 20 years. After that, it will be off patent and it will become a public domain. So yung patent mo, pwede nang gamitin kahit sino, hindi ka na protected. Most SERVCO agreements executed after 2003 explicitly provided that any marketing concepts developed by third-party vendors are the property of the expert. No? Thus, cementing ownership in headquarters of subsequently developed marketing intangibles. Okay, so yun yung nangyari dun sa assets and income ng companies, no? Supply points. The table shows the average book assets appearing in the pro forma balance sheets of the 7 supply points during 2007 to 2009. So, balikan natin, itong pro forma balance sheets, hindi to pinrepair ng Coca-Cola, no? Pinrepair na lang nila to during the transfer pricing audit of the IRS, no? Kaya nga pro forma lang siya because this has not been prepared and reported, no? So average assets per books in millions, no? So Brazil, Chile, Costa Rica, Egypt, Ireland, Mexico, Swaziland. Their cash and cash equivalents, the trade accounts receivable, the inventories, okay, the prepaid expenses and other current assets, investment in investee, investment in consolidated affiliates, other assets, property, plant, and equipment, and then the trademarks and other IP. No? So ito yung balance sheet. Sino yung pinakamalaki na ano dito? Trademarks and other IP. Si Brazil, no? Si Brazil ang pinakamalaki, followed by Ireland, and then yung next si Chile, no? Kaya sila nga yung, sa kanila nang galing yung deficiency Kasi 85% ng total sales na sa kanila. As shown in the table, all of the supply points held significant amounts of cash. Ang laki ng cash nila, and trade accounts receivable. No? Virtually all of their trade receivables were from Coca-Cola Butler's, also affiliated company. The risk of Butler default was very low, and the supply points on average reported allowances for doubtful accounts equal to 0.25% of those receivables. Walang shoutout, Hari? Ilan na lang yung viewers?
7 po.
Okay. The Brazilian, Chilean, and Irish, ito yung tatlo na sila yung top grocer, no? Top sellers. Supply points, no? Supply points sila yung supply ng concentrate. So, sabi natin, ano yung laman ng concentrate na yun? Hindi lang siya concentrate. Nandun na yung payment ng royalties, payment ng mga other charges. No? Average allowances for doubtful accounts of less than 0.1%. No? Ano yung doubtful accounts? Yung hindi na mabayaran na receivable nila from other company. And remember na sila, yung Brazilian, Chilean, and Irish, they are supply points. At kanino sila nagsusupply? Sa related parties din. No? And then, meron pa silang doubtful accounts. Kaya if you try to look at the transfer pricing guidelines dito sa Pilipinas, yung RAMO 1-2019, at saka dyan sa ating disclosure, in the BIR Form 1709 po, na pinapagawa sa atin, comes filing of the annual ITR, yung doubtful accounts o yung mga hindi na kolekta sa accounts receivable are disclosed in the BR Form 1709. No? Bakit? Kasi doubtful accounts niya or bad debts, tapos na write-off mo na. Tapos, yung receivable na yan is also coming from the related party. No? So, kayo-kayo lang. So, bakit hindi pa nagbayad? Bakit ka pa nag-recognize ng halimbawa malaking bad debts? Kasi walang effect sa iyo yun Pinalaki mo lang yung expenses. Why? Kasi yung nag-utang at pinautang, ikaw din, no? Same mukha din kasi you belong to the group. So the Irish supply point showed an unusually large investment in property, no? So yung Irish. property, plant, and equipment apparently attributable to the construction of the Balina plant in 1999, no? So during that year. The Brazilian and Chilean supply points showed unusually large investment in affiliates and investees, apparently attributable to acquisitions they made in 2009. No? May mga acquisitions sila. See Sopra Notes 5 and 6. 4 of the supply points in Ireland, Costa Rica, Egypt, and Swaziland showed no trademark or other intangible property on their balance sheets. Only the Brazilian supply point showed significant intangible property, representing about 11% of its book assets. Imagine, no? 11% ng book assets mo belongs to intangible. Okay. Next are the income and expenses. Alam nyo, itong ating discussions, no? Part 1, Part 2, Part 3, meron pa itong Part 4, meron pang Part 5, but you will always consider na inisa-isa natin, no? Paano natin inisa-isa? On the perspective muna ng how they operate, no? Kasi that's how you study transfer pricing. Hindi pwede yung diretso ka na lang dun sa findings. Hindi mo muna isa-isahin yung bawat activities. Why? Kasi sabi nga natin, transfer pricing is economic taxation. And when you say economic taxation, you deal with the economic activities of the taxpayer, of the business owner, and its taxability. No? Kaya nga ang disallowance, yung mga findings, are all sort of business activity, no? Economic activity. Okay, let's now go to income and expenses. The company derived its share of system profit through Butler's payments for concentrate, no? Kaya nga, pagka marinig nyo yung salita na concentrate, question mark kayo kaagad dyan, no? Kasi that is not merely payment of concentrate. The supply points receive and retain the bulk of its income remitting to CCC only what was needed to satisfy the royalty obligation as determined under the 10-50-50 method. Most administrative and marketing expenses were incurred by headquarters or the served cost. No? So, nandun sa kanila yung DME. These expenses were placed in the books of the supply points through intercompany charges. No? Nasa kanila yung marketing administrative expenses pero binubook lang nila sa supply points through intercompany charges. No? Kaya anong tinitingnan natin sa intercompany or intragroup services natin sa transfer pricing? There in the guideline ng 2017 OECD transfer pricing guidelines, meron dyan na about intragroup services. No? Okay. 5 of the company points were charged pro rata. No? Kaya nga yung pag sinabi natin na pro rata, pare-pareho sila ng halimbawa charges, which reimbursed headquarters for headquarters expense. All of the supply points were charged DME incurred by the served cost, and most were charged fees and commissions. Markup service co-expenses. These intercompany charges reimbursed export for amounts that the served cost had billed to it. Although the supply points pro forma income statements show DME direct marketing expenses as a direct expense, Petitioner has not identified any supply point that actually incurred out-of-pocket cost for DME. As far as the record reveals, all of the DME shown on the supply points pro forma income statements reflects intercompany charges for DME incurred by the served cost. No? Kaya yun yung sabi natin na always look at or review the contractual terms because it can be that there is a contract but this is not followed. Just like what happened to this case ng Coca-Cola. No? Anong nawala dito yung DME, yung direct marketing expenses. Ang direct marketing expenses, ano pala yung purpose kanina nung binasa natin? Pwede nilang taasan pag gusto nilang maliit yung profit. Pwede nilang liitan pag gusto nilang malaki ang profit. No? Kaya itong DME, ito yung variable nila. Bakit? Kasi pwede nilang taasan, pwedeng liitan. Ito yung ginagawa nila na nagawa nila ng adjustment pag gusto nilang lakihan yung profit or liitan yung profit. And ano yung purpose nun? To save the payment of income tax. No? Headquarters income stream reflected its role as brand owner and administrator. Its gross receipts. Ito na yung headquarters sa Atlanta, Georgia. For 2007 to 2009, consisted primarily of pro rata and royalties for use of its intangible property. Saan galing itong royalties? Kasama to doon sa payment ng concentrate, no? So, headquarters gross receipts for these years in US dollars rounded to the nearest million, included the following year, 2007, 2008, 2009, and then the total, no? So, the IP royalties is 1.3, rounded to the nearest million. So, 1,394,000. 2008, 1,536,000, and 2009, 1,473,000. No? So, prorata nila is 501, 513, 497. Ito yung 1,511. These figures include royalties paid by 11 foreign supply points, not at issue in this case, but exclude any dividends paid by supply points in partial satisfaction of their royalty obligations under the 10-50-50 method. No? Headquarter incurred numerous operating expenses, most of which were typical of the cost. Anong oras na, Hari?
1 hour, 1 minute.
1 hour. 1 hour tayo. No? So,
Shoutout tayo.
shoutout. Sige, sinong shoutout natin?
Shoutout po kay Sir Rams, Madrid.
Yes, si Sir Rams Madrid, no? Very, yan siya sa transfer pricing, no? Good luck sa transfer pricing study mo. That's why, talagang specifically I explain to you kung ano yung ginagawa kasi gayahin yung to when you make your transfer pricing analysis, no? At hindi lang yun, kasi when we prepare our transfer pricing analysis, we are preparing for a transfer pricing audit. Kasi ang ginagawa natin actually dito, this is not for any other purpose. This is for the transfer pricing audit. At yung nakita ko in the case of this Coca-Cola, once na nasa court na yung case, yung gumawa ng transfer pricing study will be also called or summoned by the court to testify. Halimbawa, ikaw gumawa ka ng, like in this case ng Coca-Cola, Ernst & Young yung gumawa sa kanila. Ernst & Young were also summoned by the court, no? To explain yung ginawa niya. Kasi sabi niya, arm's length ang transaction ng Coke. Oh. Tapos the Coke presented or hired an industry expert. Tapos ang recommendation is, it is not arm's length. No? Kasi, di naman, sa dami din na nawawala na mga documentation yung Coke at saka yung kanyang contracts, no? Saan siya talagang na dito? Kung baga sa huling-huli sa mga contractual agreements niya, sa contracts niya. Bakit? Kasi if you try to think about the contracts, hindi nila pinaperfect yung contract, which is arm's length. Sana dapat yung mga provisions. Why? Because the contracts are between the related parties. So, may mga loophole man yan, may mga error man yan, or may bias man yan, walang effect sa kanila because they belong to the same group. No? Walang nawawala. Kasi kung ano man yung mapunta doon sa isa, still it belongs to the group. No? Sino pa?
Siya pa lang, ma'am.
Okay.
8 viewers po.
Okay, so, ito na. Headquarters incurred numerous operating expenses, most of which were typical of the cost one would expect to be incurred by a headquarters unit. After deduction of these expenses and adjustments for non-operating income and taxes, HQ reported net income in US dollars rounded to the nearest million as follows. Sinong under audit dito? Yung headquarters mismo sa Atlanta, Georgia. No? Kasi IRS ito ang nag-audit. No? So for the year 2007, the net income is 1.6 billion, 2008, 1.4 billion, 2009, 1.2 billion. Okay. Supply points. The supply points showed fairly steady increases in revenue before and during the tax years in issue, no? Bakit fairly increases? Kasi ano nila to, controlled nila, di ba? Kasi nag-split invoicing nga sila na hindi to yung actual na sale ng supply points because nag-split invoicing sila na not all the sales of the supply points were invoiced or declared sa supply points. Doon nila dinideclare sa servcos, no? So that revenue consisted almost entirely of payments from butlers for concentrate, no? So occasionally, supply points also sold concentrate to one another. The table below shows the revenues reported by the supply points for 2001 through 2009, no? So supply points revenue in US millions, no? So year. So namamayagpag talaga itong Brazil, Chile, and Costa Rica, no? So sila talaga, kaya nga 85% ng total sales ng nasa kanila, no? So yung Brazil ang pinakamalaki, no? Okay. Okay, so against these revenues, the supply points offset their cost of goods and services, no? So i-deduct nila yon, and certain minor incomes. Generally speaking, the cost of goods sold was modest compared to their revenues. The supply points had relatively few manufacturing employees, and the materials needed to produce concentrate were inexpensive and often procured by the company involved, no? After offering cost of goods sold and other items, the supply points reported gross profit in US dollars, rounded to the nearest million, and gross profit margins for 2007, 2008, and 2009 as follows. Bakit pinapakita po to? Kasi ito yung kinompare nila, no? Yung comparable profit method. No? So, magkano yung gross profit margins ng Brazil, Chile, Costa Rica, Egypt, Ireland, Mexico, and Swaziland for 2007, 2008, and 2009, no? So, gross profit is 930 in million of dollars to no? And then the margin is 81.7, no? 2008, 2009, no? So, we have here the total. From these gross profits, the supply points deducted their business expenses, no? Kasi gross pa siya no? So less pa yung operating expenses. This consisted of intercompany charges and direct expenses. Intercompany charges, which varied greatly among the supply points, included royalties, pro rata, fees and commissions, and DME, or the direct marketing expenses, which were significant only for the Brazilian supply points, including general and administrative expenses, sales service cost, and marketing expenses other than DME. Okay. The table below shows the average annual business expenses by category reported by supply points during 2007 to 2009. Hari, alika. Excuse me lang po, viewers. Binuksan mo yun doon? Nakabukas? Oo. Okay. Excuse lang po sandali, viewers, no? Inom lang ako ng tubig na medyo ano lang yung lalamunan ko. Patayin mo na muna yung aircon, ang lamig.
Meron kasi kanina.
So, dito, Ilan pa yung viewers natin?
7.
I-chat mo sila, Banji.
Share ko na.
Meron na? Pumasok sila?
Ako.
Okay. So, marami sila doon. Okay. So, let's continue. Ano yung dinidiscuss natin? Ito na yung data or ito na yung mga information na source ng adjustment po ng IRS, no? Ng tax audit. Ito na yung talagang figure na magko-compute na ng adjustment because meron ng findings, no? Okay. So, yung 2007 to 2009, ito yung under audit. Ito yung average annual business expenses in millions, no? For the supply point, their direct expenses, their direct marketing expenses, the fees and the commissions, and then their prorata nila, the intercompany royalties, and then the total, no? So ito na yung pinaka-breakdown ng business expenses nila. Okay, so for Brazil, try to look at Brazil. Wala siyang fees and commissions, wala siyang prorata, wala siyang intercompany royalties, no? Siya yung pinakamalaki. No? Okay. As shown in the table above, the Brazilian, Costa Rican, Chilean, and Egyptian supply points recorded minimal or no royalty payments to TCCC, no? Kasi wala naman talaga Bakit? Kasi hindi naman nila nire-recognize. Petitioner represents that they fully satisfied their royalty obligations under the 10-50-50 method in other ways. Kaya nga other ways. Bakit? By paying dividends and or pro rata. The Brazilian and Egyptian supply points did not participate in the pro rata regime. No? See Supra, page 48. So they showed no payments in this category. Ibalik mo na yung aircon dyan. Mainit. The charges for fees and commissions and DME varied widely among the supply points with no clear relationship to their gross revenues. No? The Egyptian and Swazi supply points during 2007 to 2009 were allocated fees and commissions that averaged 40% of their gross revenues, whereas the Brazilian and Chilean supply points reported zero fees and commissions. No? So you can just imagine the DME charged to the supply points during 2007 to 2009 as a percentage of their average gross revenue likewise ranged widely from 0.3% to 24.8% as follows. No? Ito yung bakit napaka-crucial na we have to study the DMA or the direct marketing expenses. Kasi di ba yun yung tiningnan doon sa agreement kanina na yung DMA or the direct marketing expenses, yun yung ina-adjust nila if they want na malaki yung profit at yun din yung ina-adjust nila if they want na maliit yung profit. No? Okay, so ito yung direct marketing expenses. Imagine yung Costa Rica, 24%. Egypt, 22%. No? At no apparent reason bakit yung Egypt palaging lost for how many years. No? And then, ang laki pala ng kanyang direct marketing expenses. After deducting intercompany charges, makikita mo na hindi siya parang hindi siya kapanipaniwala. Bakit? Palagi siyang net loss, pero ang laki ng kanyang direct marketing expenses. No? So, anong result ng marketing expenses mo kung talagang chinarge mo yun sa direct marketing expenses? Of course, may ano yan, may effect yan dun sa sales mo na siyempre, minintain mo yung expenses na yan, lumalaki yung sales mo. No? But sa record, yung Egypt, palaging net loss. No? So after deducting intercompany charges, and direct expenses as shown above, the supply points reported operating profit for 2007, 2008, and 2009 as follows. Ito, bakit based on the findings. Itong supply points, di ba? Itong supply points, dito bumibili ng concentrates yung mga butlers, no? Pero pagdating na doon sa split invoicing, anong nangyayari sa invoice ng supply points? Part ng kanyang invoice, ng kanyang sales, ini-invoice niya doon sa Servco. Kaya purposely yung Servco can be a conduit company lang, no? Kasi kinreate yun para hatiin lang nila yung supposed to be na sales na dapat nakay supply point, no? So, ito yung operating profit ng supply point. But, of course, kung hindi sana natin na-discuss yung anong ginawa nila na nag-split invoicing sila, isang tingin mo lang dito sa supply point, ma-attribute mo na ito pala yung profit niya. But since meron silang ginawa doon sa split invoicing, pagtingin mo dito, masasabi mo na hindi talaga ito yung profit ng supply point. No? Because of the split invoicing na hindi lahat ng kanyang sales in-account niya, niresibo niya, pina-account niya doon kay Servco. No? So, the allocation of zero fees and commissions to the Brazilian and Chilean supply points, alam mo saan makikita ito? Pag ako yung examiner. Saan ko to sila titingnan para makita mo yung Act 1? Sa inventory. No? Kaya ngayon nakakonsiderate ang biyaya sa inventory because inventory will not lie. No? Hindi yan magsisinungaling. Kung magkano yung pumasok sa iyo na inventory, yun ang ano mo. Pag may nawala yan, that is sales. No? Okay. So the allocation of zero fees and commissions to the Brazilian and Chilean supply points might be explained in part by the local Servco's receipt of split invoicing, revenues from Venezuelan and Colombian butlers, no? See Sopra page 65 to 66, where split invoicing occurred. Yan. The supply points that sold to those butlers lost revenue. Yan na, nawala yung revenue ng supply points. But they avoided having an equivalent amount of Serco expenses charged to their books. No? Petitioner has not quantified these effects. Hindi ma-explain ng Coke. No? Kaya ang nangyari dito, kahit nag-appeal na sila, panalo pa rin ang IRS. No? Kasi solid yung findings ng IRS. Why? Saan niya nakita? Doon sa agreements. Kasi pag hindi mo yan titingnan, hindi mo makita. Pag dito ka lang titingin sa financial report, hindi mo ma-explain mabuti na, tama itong ni-report nila na sales ng supply point. Pero kung tiningnan mo yung mga kontrata, yun pala, nag-split invoicing sila doon. No? Hindi nila ni-report lahat ng sales ng supply point, ni-report nila doon sa Servco. No? Okay. The 7 supply points involved here had a weighted average income tax rate of 6.3%, no? Bakit 6.3%? Kasi ang income dito controlled din, di ba? Because of the DME, yung direct marketing expenses, na yun yung ginawa nilang variable, whether taasan nila o babaan, yung profit. After adjustments for taxes and non-operating income, these 7 supply points reported total net income of 11.36 billion. Just imagine, pero kulang pa to kasi supply points lang to no? For 2007 and 2009, no? So the total which exclude the income realized by the company's 11 other foreign supply points equal 264% of the net income of 4.31 billion recorded by headquarters during 2007 and 2009, no? Which included all royalties paid by all foreign affiliates. So, kulang pa rin yan, no? Okay. Brazilian trademarks. TCCC, alam nyo, mas exciting pag may findings na no? Kung may findings na, makikita mo na parang ikaw na, halimbawa, nagta-transfer pricing audit ka. Pag may nakita ka ng mga issues, parang lumilinaw na yung transfer pricing audit. No? So, Brazilian trademarks. TCCC initially did business in Brazil through a branch. No? So, branch. Ibig sabihin, head office and branch. No? So, it conducted branch operations in Brazil beginning in 1945 or earlier. Imagine, pagkatapos ng Second World War, nandun na siya. Those brands operations included the manufacture of concentrate beginning in 1949 or earlier. Coca-Cola bottlers have done business in Brazil since at least 1942. 1942, kasagsagan ng Second World War, no? So, nandun siya. TCCC registered its first Brazilian trademark in 1912. 1912 is also 1914 ang First World War. You can just imagine na every time mag-erupt yung World War, nandun siya. No? So, strategic. Between 1912 and 1962, when the Brazilian supply point was incorporated, TCCC registered 9 trademarks in Brazil. 5 related to Coca-Cola, covering the product names Coca-Cola and Coke, the stylized label, and the Spencerian script. No? Yun yung gumaganon-ganon na Coca-Cola. No? 2 related to Fanta and to Sprite, covering those product names and their stylized labels. In February 1963, TCCC executed an agreement authorizing the Brazilian supply point to manufacture, concentrate, and to use TCCC's trademarks in doing so. No? No Brazil. Pero pag tingnan mo, yung Brazil is just a branch of the headquarters, no? So sila pa rin yun. This agreement, which related solely to Coca-Cola products, stated that the trademarks continued to be TCCC's exclusive property and that TCCC had the exclusive right and jurisdiction to control the use of the trademarks. The agreement did not require the Brazilian supply point to perform marketing activities or incur marketing expenditures. So somewhere parang may kulang yung agreement. Between 1963 and November 7, 1985, TCCC registered an additional 6 trademarks in Brazil. 5 related to Coca-Cola, covering the dynamic ribbon and the product name Coke Light, Coca-Cola Light, and Coke Classic. No? The 6th was a seemingly duplicative trademark for Sprite. Okay. So, ano na to parang exciting na kasi nandito na tayo sa findings po ng IRS, no? Kasi yung first part natin deals only with the milestone, with the history, kung anong ginagawa ng Coca-Cola. Tapos dun sa second, sa mga yung marketing expenses nila yon sa operations, and then yung part nung second discussion natin, nandun na tayo sa contrast, no? Ngayon, findings na to ng IRS. No? So, between 1963 and November 17, 1985, TCCC, ito na yung mga hina-highlight ng case Ito yung mga findings, no? O ano nang pinaggawa ng Coca-Cola na kakaroon na ng conclusion yung IRS at yung mga pagkukulang ng Coke, no? Kaya nga yun yung sinasabi ko sa inyo na kahit sa tao, napakatalino mo naman, pero you still have lapses. No? So between 1963 and November 17, 1985, TCCC registered an additional 6 trademarks in Brazil, 5 related to Coca-Cola, covering the dynamic ribbon and the product names Coke Light, Coca-Cola Light, and Coke Classic. The 6th was a seemingly duplicative trademark for Sprite. No? Between November 17, 1985 and the tax years at issue, TCCC registered at least 53 additional trademarks in Brazil. No? Imagine, these covered the Coca-Cola contour bottle shape, secondary design features for TCCC's core products, advertising slogans, and composites of existing trademarks elements. No? So you can just imagine na yung ibang mga rights niya nandun na sa Brazil. No? And you can just also imagine that Brazil is a branch, no, of Coca-Cola. They also cover dozens of newer products, including Coke Zero, Diet Fanta, Dasani, Minute Maid, Powerade, Kuwat, and numerous other local Brazilian brands. No? So the February 1963 agreement was amended often between 1981 and 1996. No? Imagine, ganun ka tagal. To refer to products other than Coca-Cola and to authorize the Brazilian supply point to use the other trademarks described above. These amendments made clear that all trademarks were TCC's exclusive property and that the Brazilian supply point was granted only a limited right to use them to manufacture and distribute concentrate. None of the agreements as thus amended required the Brazilian supply point to perform any marketing activities or incur any marketing expenses. So, hindi niya tayo pinayagan si Brazilian na magkaroon ng marketing expenses. No? Tax reporting and IRS examination, ito na. Ito na po. Ito na yung pinaka masaya kasi nag-hire na dito ng industry expert, no? At pakinggan natin kung ano yung nagiging opinion po ng industry expert, no? And sa transfer pricing ng mga dispute, napakalaki po ng points na industry expert. Tax reporting and IRS examination. During 2007 and 2009, petitioner used the 10-50-50 method to determine the royalty obligations of the supply points. Under that method, supply points were permitted to satisfy their royal obligations by a combination of actual royalties, dividends, and pro rata payments. Okay. Bago ko makalimutan, Hari, reminder, gagawa na tayo ng research natin on the economic conditions ng 2020, local and international. No? Mag-ano ka na, research. Yes. Soft copy lang lahat. And then, yung source documents, saan galing yung articles. Okay. Mabilis na lang ngayon mag-research kasi marami ng data. Baha na yung data sa internet. Basta ang ano mo lang dyan, nandyan yung source mo, documents kung saan nanggaling. Okay. Ito na yung tax reporting, no? At saka yung IRS examination. The Brazilian and Chilean supply points remitted during these years in satisfaction of their royalty obligations aggregate dividends of about 887 million and 233 million respectively. Atlantic, which operated the Costa Rican, Egyptian, Irish, and Swazi supply points as branches, or directly or indirectly, remitted aggregate dividends of about 682 million in satisfaction of those supply points' royalty obligations. For this purpose, petitioner treated Atlantic's 4 supply points as a consolidated entity. Although petitioner elected dividend offset treatment on timely filed returns for 2007 and 2009, it did not include in those returns explanatory statements as directed by Revenue Proclamation 99-32, 1999-2 CB 296. The IRS selected petitioners 2007 to 2009 returns for examination. Di ba may agreement sila noong 1996, no? So, na-examine siya noong 2007 and 2009 na returns. It determined that the 10-50-50 method did not reflect arm's length pricing because that method overcompensated the supply points and undercompensated TCCC for the use of its intangible property. So, yun na yung findings. Kaya nagkaroon sila ng additional, ng adjustment and have additional deficiency income tax. No? Bakit? Kasi overcompensated ang supply points, undercompensated naman yung TCC, no? For the use of intangible property. The IRS retained an economist, no? Dr. Scott Nyolon, to analyze petitioners' intercompany pricing and determine the best method to reallocate income. So, economist, no? Siya yung hinire ng IRS. Dr. Nyolon concluded that TCC, as the legal owner of virtually all the company trademarks and intangible property, owned the vast bulk of its brand value. Siyempre, siya yung may-ari. But he found that the supply points, which function essentially as contract manufacturers, retained most of the profits generated by sales of the concentrate to foreign butlers, no? Ano yung observation kaagad ni Dr. Nyolon, yung economist hired by the IRS? Si TCCC, siya yung owner ng lahat ng intangible property. Pero, anong nakita niya? Yung supply points, na siya yung contract manufacturers, nasa kanya ang profits, no? Generated by sales of concentrate to foreign butlers. He concluded that a reallocation of income was necessary in order to reflect clearly the income of TCCC and its supply point affiliates. So anong conclusion niya? Reallocation of income, no? Under Section 50, Anong sabi dito? Anong sabi doon? That gives our commissioner, sa atin ha, dito sa Pilipinas, that gives the commissioner the power to allocate, apportion, or distribute, no? So in this example, anong ginawa dito? Reallocation of income, no? Anong basis nito din sa IRS? Doon sa IRS nila yung section 482, which is equivalent to section 50 dito sa atin sa Pilipinas, no? Ano yung nakalagay din doon? So same wordings with sa section 50. Ano yun? Yung power of the commissioner to allocate, apportion, and distribute income and expenses, no? Para ma-avoid yung tax evasion. Okay. So concluding that no uncontrolled transaction could accurately capture the value of licensing the company's unique brands, Dr. Newland rejected the comparable uncontrolled transactions, no? So hindi pwede na comparable uncontrolled transactions yung gamitin mo as a transfer pricing methodology. He likewise rejected a profit split method. Ano yung profit split method? Gamitin mo yun pagka highly integrated yung business, no? Dito naman sa comparable uncontrolled transactions, gamitin mo to pag there is exactly the same comparable. Pag wala, hindi mo siya pwedeng gamitin, no? He likewise rejected a profit split method, finding it unreliable where one party, the TCCC, owned valuable intangible assets and the other parties, the supply points, owned virtually none, no? So hindi mo magamit yung profit split, no? Bakit? Kasi si TCCC, siya yung may-ari ng lahat, halos ang iba ng magka-split, halimbawa sila ng profit, wala namang intangible properties, si TCCC lang. So instead, he elected to apply a comparable profits method, no, yung CPM, using independent Coca-Cola bottlers as parties comparable to the supply points. So yun yung recommendation niya, no? So hindi pwede yung comparable uncontrolled transaction method, hindi rin pwede yung profit split method. So anong recommended niya? The comparable profits method, no? Using independent Coca-Cola bottlers, no? So yun yung naging comparable niya. So in the initial report that he prepared for the IRS, Dr. Newland selected 18 independent Coca-Cola bottlers, no? So 18 independent bottlers, yun yung comparable niya. Headquartered in 10 different countries, no? That had qualified auditors, no? So pero hindi dito sa time na to, 'di ba nagkaroon din ng study yung Ernst & Young to prove na arm's length ang transactions ng Coca-Cola. But that was prior to this 2007 to 2009 na under investigation or audit, no? So anong ginawa doon ng Ernst & Young? Yung master documentation na platform, no? So yun yung parang documentation ngayon. He concluded that a return on operating assets or ROA, derived from these bottlers' operations would yield appropriate adjustments to the supply points in CAR. He believed that such adjustment would be conservative because the bottlers, which possess distribution networks and customer relationships, had more bargaining power than the supply points, which could be, and other were terminated by petitioner at will, no? Sino yung petitioner dito? The Coca-Cola. Okay. Dr. Newland began his analysis by calculating the 18 bottlers' operating income and operating assets, all of which he stated in their local currencies. He then divided operating income by operating assets to determine ROA for each bottler. No? These results appear in the following table. So ito yung mga bottler home, ito yung bottlers, ito yung operating income nila, percent of net revenue, and then operating assets, percent of net revenue, no? And then the ROA, return on assets. Excuse me. Sino yung butler's home na to? Ito yung Chile, Mexico, ito yung places kung saan sila located, no? Sino yung mga pangalan ng butlers? Imbotelladora Andina is A, no? So, magkano yung operating income niya? 18%, operating assets 41.2%, no? So, return on assets 43.6%. We have in Mexico, Coca-Cola FEMSA, no? Is ABDCV. Operating income 7.5%, operating assets 43.1%, and ROA 40.6%. And then in Mexico also, Grupo Continental is AB, 18.1, 50%, and 36.2%. Chile, Coca-Cola Imbonor is A. No? And then Mexico, Embotelladora Arca is ABDCV. Australia, Coca-Cola Amatil Limited. Spain, Compañía Norteña de Bebidas Gaseosas is A. Chile, Embotelladoras Coca-Cola Polar is A. No? And then the USA, Coca-Cola Enterprises Inc. No? Okay. As discussed in page 136, Dr. Newland in his expert witness report expanded its analysis to include 6 additional independent Coca-Cola bottlers. To avoid showing results in 10 different currencies, the table shows each bottler's operating income and operating assets as a percentage of its net revenue. No? So, yan ang mga table, no? Kasama pa rin yung Turkey, Greece, USA, Nigeria, Japan, no? Tatlong Japan, and then Thailand, no? And then Japan ulit. So Dr. Newland observed that the 5 East Asian bottlers had the lowest ROA or return on assets, suggesting that they might be subject to uniquely local market conditions, no? Kaya nga we have 5 comparability factors, di ba? Kaya ito yung tandaan natin, no? Nag-aaral tayo ng transfer pricing. Tandaan natin palagi. That's why sabi ng OECD, you memorize the 5 comparability factors. Kasi pagdating sa transfer pricing audit, paggawa nyo ng transfer pricing analysis report, you focus on that 5 comparability factors. And kung ikaw yung gumagawa ng transfer pricing analysis in favor of your client, dapat itong 5 comparability factors, you have documents to satisfy, no, to prove that all these comparability factors na to are all arm's length, no? Kasi pag mayroon kang hindi nakakalitan, kaya sabi ko, napakagaling na ng mga strategies na ginawa ng Coke. Nagkaroon na siya ng lapses pagdating sa contractual terms, no? Okay. So, anong sabi dito ni Dr. Newland? Ito yung local market conditions, no? Kaya nga we will be starting to make na kasi may nag-confirm na kaming mga clients, no? So, mag-uumpisa na tayo, hari. After ng oo, ang dami pa naman. Sabay-sabay, group of companies yan. So, nag-confirm na sila. So, ito yung makikita ko na sa overview ko, yung local market conditions in 2020 na, di ba, COVID. But, yun yung, there are companies na talagang nagsara, una wala ng operations. But there are companies also who really make money. Sino yun? Yung nasa pharmaceutical. Huh? Yeah. Kaya tingnan mo, gumawa ka na ng research on the local market conditions per industry, no? So, pag sinabi mo mga travel agencies, wala talaga yan, sarado. Transportation companies, wala din, sarado. Hotel, restaurant, wala rin. So, sino yung nag-boom during the pandemic? Ito yung mga groceries, ito yung mga foods, no? Ito yung mga pharmaceuticals, kasi sila yung bukas during the pandemic. Okay. Okay, so Dr. Newland also observed that Latin American bottlers tended to have a very high ROAS, no? So bakit nandoon sa Latin America yung mataas na return on assets? Kasi especially yung Brazilian, di ba? Yung Brazilian talagang branch yan ng Coca-Cola headquarters sa Atlanta, Georgia. At hindi lang yon, yung ibang mga intangibles niya nandun kay Brazilian, no? To test the sensitivity of his analysis to regional differences, he segmented the butlers. Kaya ito, titingnan natin and ready tayo, kasi especially sa documentation, no? Ito yung segmentation ng mga financial reports, no? So, test the sensitivity of his analysis to regional differences. He segmented the butlers as follows, no? All 18 butlers, non-East Asian butlers, Latin American butlers, and non-East Asian butlers outside Latin America. Bakit? Magkaiba na sila ng economic conditions kasi magkaiba na silang regions. No? He determined interquartile range ROAS for the butlers in its segment as follows. No? Butler segment. Ito na yung butler segment niya. Ito na yung division niya or classification na under study. No? So, all butlers na 18, the non-East Asian butlers, 13 sila. Latin American butlers, 6 sila. Non-East Asian butlers outside Latin America, 7, no? 7 companies. Interquartile range return on assets, 2007 to 2009. 25 percentile, medium, and then the 75th percentile, no? So, all butlers, yung 25 percentile niya na range, 7.4%. Yung sa 75th percentile naman, 31.8%, no? Okay. So, sabi ng OECD, yung acceptable na range is between 25 and 75. But do not calculate also yung mga under and over kasi you have to look at also kung ano ba yung cost, kung bakit naging under sila ng 25% or nag-over pa sila doon sa 75%. Why? Because 25th to 75th percentile are still acceptable or within the range. No? So, yan ang sabi po ng OECD, hindi ako nagsabi niyan, but during our study, kasi tinanong ko talaga yan what is acceptable. No? So, Dr. Nyolon then calculated ROAS for the supply points. He determined their operating assets in essentially the same manner as for the butlers, but added an imputed asset equal to an estimated average of the supply points intercompany receivables. No? So he then divided operating income by operating assets to yield ROAS as follows. No? Kasi ano ba yung return on assets? Operating income divided by operating assets. Kasi magkano ba yung kinita mo at magkano ba yung investment mo sa assets? Why? Kasi makikita mo na yung percentage na minsan sobrang laki ng assets mo tapos ito lang yung operating income mo. No? May factor yan. So return on operating assets or ROA, the supply point 2007, 2008, 2009, and 2007 to 2009. So you can just imagine na ito yung Ireland 189%, no? 175 yung Brazil, Chile 150, Costa Rica 128, Swaziland 103, Mexico 86, Egypt negative 38, no? So, kung hindi mo alam kung ano yung mga nangyayari, masasabi mo na, wala itong Egypt net loss to. But if you try to look at, nandoon yung mga invoice splitting, no? Splitting of invoice, at saka yung mga DME nila, yung direct marketing expenses. So, masasabi mo pa rin na if you try to analyze, may reason kung bakit negative itong Egypt. No? So because the first 6 supply points had ROAS that dwarfed those of their bottling counterparts, but sila napakalaki. No? Dr. Nyolon concluded that the supply points had received compensation in excess of the arm's length amount. So ano yung kanyang conclusion? Bakit sila sobrang laki, yung iba maliliit? So they receive more. No? Kasi isipin mo lang, saan ba naman galing yung kanilang income na yan? No? He accordingly recommended that the IRS, number 1, adjust the income of the Brazilian, Chilean, Costa Rican, and Mexican supply points downward to reflect a ROA. No? And then, consistent with the ROAS of the Latin American Butler segment, no? And then adjust the income of the Irish and Swazi supply points downward to reflect a ROA consistent with the ROAS of the Butlers generally, and adjust the income of the Egyptian supply point upward for 2007 and 2008. So yung nag-declare ng sobra-sobra, bawasan, adjust downward. Yun namang Egypt na napakaliit, dagdagan naman, no? The IRS implemented adjustment consistent with Dr. Newland's recommendations, no? Kaya po sabi dito sa transfer pricing study that the opinion of the expert is very important po pagdating na sa transfer pricing, no? It adjusted the income of the Brazilian, Chilean, Costa Rican, and Mexican supply points downward to reflect the median ROA of the Latin American Butler segment. Why? Because the recommendation of the industry expert makes sense. Kaya sabi natin, transfer pricing is just common sense. Pero tingnan mo naman, pag nagsabi mong common sense, may logic, totoo, no? So, ano recommendation niya dito? I-adjust yung profit, yung sobra-sobra, adjust downward, yun namang kulang, adjust upward. And it adjusted the income of the Irish and Swazi supply points downward to reflect the median ROA of the 13 non-East Asian butlers, no? To the extent a supply point reported income that exceeded its benchmark, the IRS determined that additional royalty income should be allocated to petitioner from that supply point, no? The IRS calculated the additional royalties due to petitioner in millions of US dollars as follows. Okay. From supply point, Ireland, Brazil, Swaziland, Mexico, Chile, Costa Rica, and then Egypt. No? So 2007, 2008, 2009, and then ito yung total po na adjustment, no? So the IRS issued petitioner a timely notice of deficiency. Ito na yung, kaya nga the IRS here came up with an 9 billion na adjustment sa 3 years, no? So ito na yung total. Ito na yung breakdown po ng assessment ng IRS or findings. Okay. So the IRS issued petitioner a timely notice of deficiency reflecting these adjustments, and petitioner timely sought review in this court, no? So nung nagbigay na ng assessment ang IRS, pumunta agad sa court ang Corp, no? Following discovery, respondent amended his answer to assert additional deficiencies related to petitioner's practice of split invoicing, no? So dagdag pa ng findings ang IRS doon sa na-discover nila na split invoicing na ginagawa ng Coca-Cola. Paano sila nagkaroon ng split invoicing? Part of the income of the supply points napunta doon sa ServCo, no? So the ServCos that benefited from split invoicing received compensation from the participating butlers at rates that were higher on average than the rates specified in the agreements, no? Okay. Kaya nga ang agreements are very important, no? Pag nag-deviate ka dyan, there must be a reason, no? So those ServCos had executed with export. See SOPRA page 66, concluding that the ServCo agreements with export reflected arm's length norms. The IRS alleged that any excess income that a ServCo received from a butler, compensation exists of a modest markup on non-DMA expenses should be reallocated to petitioner. No? Sino yung petitioner dito? The Coca-Cola. Yung income na nandun sa ibang company, ipinapa-reallocate sa Coca-Cola mismo. Kasi yung Coca-Cola, taxable siya sa IRS dun sa Atlanta, Georgia. In his amended answer, respondent asserted increased deficiencies with respect to 6 ServCos that had received split invoicing payments, no? Ito na yung mga naka-receive ng split invoicing. Were not branches of TCC or export and had received excess income from butlers, no? So naka-receive sila ng excess income from butlers at hindi sila branches. For the Turkish ServCo, respondent defined excess income as income in excess of the 8% markup specified in its Butler Agreement. Kasi may agreement sila eh. That's why, alam nyo, pagdating na sa transfer pricing audit, kung ano man yung agreement, you have to stick to the agreement. Kasi kung may mga deviation yan dyan, that can be a potential findings for adjustment. And that adjustment will definitely result to deficiency, no? Deficiency income. For the other 5 servcos with slack written agreements with their butlers, wala silang written agreement. Respondent defined excess income as income in excess of a 5% markup on non-DMA expenses. Those adjustments yielded reallocations of income from the servcos to petitioner as follows. So ito na yung reallocation nila na total for 2007 to 2009. No? 385,443,358. Sa invoice splitting po ito, iba pa yung kanina na una na reallocation, no, ng royalties. Respondent made no adjustment on account of the Bolivian or Moroccan servcos, presumably because those entities were branches of Export, a U.S. corporation, so that petitioner had already received any excess income that butlers had paid them. So hindi na niya inadjust yung Bolivian Moroccan servcos kasi nag-remit na yon sa kay export na US corporation, nandoon na, nag-remit na yung income. Kaya hindi na nila inassess. No? So this adjustment produced additional deficiencies to totaling 134,905,174 for the 3 years. No? Okay. Anong oras na, Hari? Kasi nandito na ang next, yun yung presentation na, doon na yung mga findings. Kasi ang susunod natin, opinion na po ng court. Anong oras na?
52 minutes.
Ha?
52.
Minutes. So, start muna tayo kahit konti lang. Dito sa opinion. Ito na yung opinion na po ng court. Ha? Okay. So, burden of proof, number 1. The commissioner's determination in a notice of deficiency are generally presumed correct. Generally presumed correct. May mga cases po sila dito na pinresent na pag kailan nagiging presumed correct yung opinion ng commissioner. No? In Rule 142A, Blom versus Commissioner 994F to 1542, 1548 to 1549, 11th Circuit 1993, no? TC Memo 1991 636. Petitioner does not urge any shift in the burden of proof under Section 7491. For purposes of assigning the burden of proof in a transfer pricing case, we have treated respondent's determination as the aggregate Section 482 adjustment appearing in the notice of deficiency. Ano yung Section 482? Ito po yung Section 15 ng ating National Internal Revenue Code. And kung may mga cases doon tayo ng transfer pricing dito sa Pilipinas, we can always refer to the jurisprudence po ng US. No? Seagate Tech Incorporated versus Commissioner 102 TC 149-170-172-1994. The presumption of correctness does not extend to and respondent bears the burden of proof in respect of any new matter, increases in deficiency, and affirmative defenses pleaded in his answer. Rule 142A1 in his amended. Pag sinabi mong rule, ito na yung rules of court, no? Ito na yung procedural ng court. In his amended answer, respondent asserted increased deficiencies totaling 134,905,174 for 2007-2009, all attributable to petitioner's use of split invoicing. Para sa akin, very conservative pa to na na findings. Bakit? Hindi pa nga nag-resort to inventory analysis yung IRS dito. Respondent bears the burden of proof with respect to these increases in deficiency. Okay. Standard review. Section 482 has its genesis in a provision of the Revenue Act of 1926 that authorized the commissioner to consolidate the accounts of related parties. As you can see, doon, ito opinion na to ng court. Batayin mo sandali yung aircon. Itong opinion na to ng court, no? Section 482, saan siya galing? Doon daw sa Revenue Act of 1926. If you notice, yung una nating discussions on the first part of this discussion, doon sa history, na-discuss na rin natin ito at lumabas na itong mga Republic Act as early as 1926, no? Kaya nga as early as 1920s, mayroon ng transfer pricing sa United States, no? Tayo kailan lang, yung ating first na talaga na transfer pricing guidelines, 2013 lang. Imagine 2013 as against 1920s ng almost 100 years yung difference natin. Huli tayo, no? But huli man daw at okay na rin at least kahit huli nakakahabol, no? Kaya nga may transfer pricing na tayo ngayon. Section 240F of the Act provided that the Commissioner may, and at the request of the taxpayer, shall consolidate the accounts of related trades or businesses if necessary in order to make an accurate distribution or apportionment of gains, profits, income deductions, or capital between or among such related trades or businesses. If you try to look at, ito rin yung mga wordings po ng Section 50 natin at saka Section 482 ngayon, no? So, dyan din siya nanggagaling. Revenue Act of 1926, Chapter 27, Section 240F, 44 Stat at 46, no? See Raymond Pearson Motor Company versus Commissioner, 246F, second edition 509, 515, 5th Circular 1, 1957, no? Hutchison Seiji concurring. And then TC Memorandum 1955 to 2016. Treasury Memorandum ito, no? May mga downloaded tayo dyan noon na mga memorandum. The Commissioner's determination to consolidate accounts was subject to judicial review, no? See Noland Realty Company versus Commissioner 47, if second edition 1018, no? But in drafting Section 240F, Congress left some discretion in the Commissioner, and the exercise of that discretion could only be disturbed when an abuse of it was shown. No? So ito na yung sinasabi nila na sa administration, may weight, may discretion yung head ng agency. No? So in 1928, Congress repealed Section 240F and replaced it with the predecessor of Section 482, no? Yung 482 na yun na yung current natin ngayon. See ng US, no? See Revenue Act of 1928, Chapter 852, Section 45, 45 Stat at 806, Section 45 of the 1928 Act provided. Ito yung sabi. In any case of two or more trades or businesses owned or controlled directly or indirectly by the same interest, the Commissioner is authorized to distribute, apportion, or allocate gross income or deductions between or among such trades or businesses if he determines that such distribution, apportionment, or allocation is necessary in order to prevent evasion of taxes or clearly to reflect the income of any of such trades or businesses. So, try to take a look. Ito din yung Section 50 and Section 482 ng ating tax code. No? So, whereas the consolidated account provision had permitted the Commissioner to take action if necessary to apportion income accurately, Section 45 authorized him to take action if he determines that such distribution, apportionment, or allocation is necessary. The Senate Finance Committee explained that while Section 45 was based upon Section 240 of the 1926 Act, the provision was broadened considerably in order to afford adequate protection to the government. No? We addressed the proper interpretation of Section 45 of the 1928 Act in Asiatic Petroleum Company versus Commissioner, 31 BTA 1152, 1935. We emphasize that the statute authorizes the Commissioner to make an allocation of income or deductions if he determines that such allocation is necessary. No? So this statement indicated that an allocation of this sort was a matter of discretion with the Commissioner. In matters entrusted to the discretion of administrative officers, no? Kasi administration sila, no, ng agency. we said that there is a heavy burden on him who claim error in its exercise. So, sino ang may burden dito to prove na nagkamali yung commissioner? The petitioner, which is the Coca-Cola in this case. No? We have treated as our own the precedent established by the Board of Tax Appeals, the predecessor of this court, no? The Tax Reform Act of 1969 and Revenue Act of 1942. No? In Asiatic Petroleum, we analogized Section 45 of the 1928 Act to Section 22C of the same law. Section 22C, provided as Section 471A, currently provides that inventories shall be taken whenever, in the opinion of the Commissioner, the use of inventories is necessary in order clearly to determine the income of any taxpayer. Kaya nga, ang titingnan mo lang dito, yung agreement between the served cost and the supply point inventory lang. No? See Hamil versus Commissioner. We concluded that the standard of review under Section 45 should resemble that under Section 22C, citing a passage from an inventory case, no? Finance and Guar Company versus Commissioner, as enunciated in the appropriate test. Where a statute commits to an executive department of the government a duty requiring the exercise of administrative discretion, the decision of the executive department as to such questions is final and conclusive unless it is clearly proven arbitrary or capricious or fraudulent or involving a mistake of law. Pag walang mistake of law, hindi rin approve na arbitrary and capricious, then yung opinion ng commissioner is correct. We held in Asiatic Petroleum that because the commissioner had exercised the discretionary power vested in him and determined that allocation was necessary, the taxpayer had the burden of showing that such determination was purely arbitrary. No? So, sino yung may burden of proof na arbitrary yun? Ang Coca-Cola. That standard of review continues to apply today. Section 482 provides, similarly to Section 45 of the 1928 Act, that the Secretary may distribute, apportion, or allocate gross income, deductions, credits, or allowances between or among organizations, trades, or businesses if he determines that such distribution, apportionment, or allocation is necessary in order to prevent evasion of taxes or clearly to reflect the income of any such entities. In order to set aside such discretionary action by the commissioner, a taxpayer must establish that the commissioner abused his discretion by making allocations that are arbitrary, capricious, and unreasonable. Okay. Accord Amazon.com Inc. and Subs versus Commissioner, Guidant LLC versus Commissioner. The Commissioner has broad discretion in applying Section 482 and we will uphold his determination, ito yung sabi ng court, unless the taxpayer shows it to be arbitrary, capricious, or unreasonable. No? Ruling that the Commissioner's Section 482 determination must be sustained absent a showing that he has abused his discretion. Okay, so our determination whether the Commissioner has abused his discretion generally turns upon questions of fact. Kaya nga ang transfer pricing case po is factual, no? Citing Packard Inc. and Subs versus Commissioner. If the record before this court fails to support the allocation, then we must conclude that the Commissioner abused his discretion. No? Mac Big Boy Prospecting versus Commissioner, and Wish Big Boys Corp versus Commissioner. But if there is substantial evidence supporting the determination, it must be affirmed. No? Kaya dito, palaging affirm ang commissioner dito. No? Sa dalawang court na, the lower court, and then during the appeal. In considering whether the commissioner abused his discretion, we have often said that our review focuses on the reasonableness of the commissioner's result and not the details of the methodology employed. Guidant LLC 1460C at 73. A taxpayer may show that the commissioner reached an unreasonable result by establishing that its income as reported reflects the results that would have been realized if uncontrolled taxpayers had engaged in the same transaction under the same circumstances. Okay. Section 1.4821B1 Income Tax Regulations, but that typically requires evidence of comparable uncontrolled transactions that support the taxpayer's return position. Of course, kahit ano pa sabihin mo yung may findings ang commissioner, you should still use the transfer pricing methods, no? Kaya in this case, nag-hire sila ng expert, no? In cases such as this involving unique and extremely valuable intangible property, comparable uncontrolled transactions may not exist. In order to show that the commissioner has reached an unreasonable result in such a case, the taxpayer typically will need to establish that the commissioner employed an unreasonable methodology to reach his result. A taxpayer may do this by showing that the commissioner's methodology implicated significant legal error. Alternatively, the taxpayer may show that the commissioner implemented his methodology in an unreasonable manner by employing erroneous assumptions, incorrect data, or an analysis that is internally inconsistent. Ito yung mga grounds na pwedeng sabihin ng court na mali yung commissioner. If the taxpayer demonstrates that the commissioner's allocation is arbitrary, capricious, or unreasonable, but fails to prove an alternative allocation that meets the arm's length standard, the court, using its best judgment, must determine from the record the proper allocation of income. No? Sunstrand Corporation versus Commissioner, Hoss Corp of America and Subs versus Commissioner, Nat Harrison Associates Inc. versus Commissioner. No? So determining a proper allocation without the benefit of any presumptions after finding the commissioner's allocation unreasonable. We may make partial allocations to the extent the evidence shows that neither side is correct. No, yun yung Eli Lilly and Company versus Commissioner. Meron na rin tayong video on that, no? Ito yung report hari ni RG, Miss RG Bustamante. Yung Eli Lilly and Company versus Commissioner. At saka itong Amazon.com, meron din tayo niya, di ba? So, Veritas Software Corp and Subs versus Commissioner, finding allocations based on a discounted cash flow methodology are reasonable where the commissioner employed the wrong useful life, the wrong discount rate, and an unrealistic growth rate. No? So, yan sa Veritas. Altama Delta Corporation, finding allocations unreasonable where the commissioner implemented his cost-plus method by marking up operating profit margins instead of gross profit margins. Ito yung mga cases na talo yung IRS dito. Sigitech Inc., rejecting expert pricing of component parts upon finding that his methodology did not meet the description of the cost-plus method in the regulations. Achero versus Commissioner, rejecting the commissioner's allocation where he made no reasonable attempt to reflect arm's length transaction among the related entities. No? So ito yung mga talo na case ang commissioner. Making partial allocations with respect to buy-in payment for taxpayers' website technology, marketing intangibles, and customer information. No? Ito yung sa Achero versus commissioner. Okay? Anong oras na?
2 hours, 9 minutes.
Okay. So, next, tingnan natin dito yung threshold kasi dito na po tayo sa opinion ng court, no? Siguro kung titingnan natin kasi yung iba dito mga kailangan natin pa rin kasi meron ng consistency with economic substance. Kasi maganda kasi yung nahimay-himay natin yung case. No, yun yung sinasabi ko na isang case lang na ma-master mo, you have the overview na ng whole transfer pricing. Why? Kasi if you try to look at, ang daming mga cases dito na nagiging base ng decision. So, pag tinignan mo lahat yan, in-analyze mo, meron ka ng whole grasp of the transfer pricing principle kung paano siya tinatry at saka pinoprove sa court. No? But for me, very important talaga yung documentation. And when you have your documentation, it must be na you should be consistent also with your treatment. No? sa mga agreements, sa mga procedures, no? They must all be documented and see to it that kagaya na lang ng mga contractual agreements ninyo. Because during the 1709 po natin dito na requirements, when you attach, no, all agreement that the company signed during the year, kasama yan sa documentation ninyo. Dapat lahat yan ng mga provisions na review yan ng management at saka ng inyong transfer pricing analyst na talagang lahat yan arm's length. Kasi yun yung purpose. No? Kasi pag hindi, magkakaroon ng adjustment later on during the transfer pricing audit. Okay, so walang shout out? Wala, ilan pa yung ating viewers?
7.
Okay, so shout out na lang po sa mga viewers natin. And thank you very much for watching. Ilan na yung ating subscriber?
433.
Okay, so 433. So nadagdagan kasi 431 lang yan kanina. No? So thank you very much and let's call it a night.